Welcome back. You're with us on Trading Hour. We have the management of PNB Housing with us. Of course, housing finance major reported Q1 numbers. The company has beaten estimates and saw its net interest income rise 2.8% sequentially. Profit after tax was up about 26% on a year-on-year basis. We have with us Mr. Girish Kousgi, MD and CEO of PNB Housing Finance. Sir, thanks for joining in. Let's start first by understanding business growth and the prospects this year. As I look at the first quarter, your AUM is up about 7.5–8% year-on-year, about 2% quarter-on-quarter. But disbursements were down sequentially, Q4 versus Q1. Just tell us what is your own target. What will be the AUM growth in this financial year? And also add to it the fact that we've heard all of these new budget announcements, right? There's talk of fresh impetus to housing and maybe, some kind of a further interest subvention as well. So what clarity do you have on those announcements, if any, and your overall target in terms of growth this year?
Good morning. I think if you look at the whole year, quarter one seems to be slightly muted compared to other quarters. And therefore, the comparison would be on YOY, not sequential, because quarter four is always the best quarter for any company on the financial side, especially into housing. So if you look at on a YOY, disbursement, we have grown by 19%. Book growth is 14.4%. If you look at the same book growth number last year, quarter one, it was 11.5%. So last year we closed book growth at 14.1%. So this year we are guiding on the retail side, book growth of 17%. So we are on track. Disbursement grew by 18%, PAT growth of 25%. Margins are stable. So I think we had a very good quarter because I think most of the company in this quarter would show muted growth. So for us, there was growth in disbursement, growth in book, margins stable. GNPA came down from 1.5 to 1.35%, and corporate GNPA is now 0.
I know asset quality performance is very good, sir. Yeah, just to, because you gave us a lot of numbers. Once again, I'm just to reiterate, FY25 AUM growth target is how much?
Book growth will be 17% growth on retail.
17%. Okay, you were talking about the budget announcements.
Yeah, so no, we have a very high-level disclosure, in the budget. I think the schemes are yet to come, but based on the conversation what we've been having in last 2 months with various authorities, the scheme is going to be big. It's going to be really, really big, PMAY, which means the allocation is going to be higher, which is going to help the lending institution on 3 counts. One, the cost of borrowing will come down, because this PMAY funding will come at a lower cost to the lending institution. It would also lead to better margins compared to what it used to be in the earlier 2 terms. So the margins are going to be better. It will improve margin profile. And third, it will definitely increase growth. So there is a lot of growth opportunity, not just on the affordable or the emerging, which is basically focused on urban and semi-urban, but even for us, all the 3 segments, prime, emerging, and affordable, all the 303 branches are geared up to make use of this opportunity.
Your net interest margins at 3.65% is ahead of your long-term 3-year guidance of 3.5%, which you had laid out when you did that investor meet a couple of months back. Can you maintain your net interest margins, and has your cost of funds come down? Because you'd spoken about how the recent upgrades by credit agencies will help bring down your overall cost. So if you could give us those 2 numbers.
So if you look at the cost of borrowing sequentially, it has come down by 6 bips. It was 7.98. For quarter one, it is 7.92. Incremental cost of borrowing has come down to 7.75%. So we were able to bring down cost, and this would pan out in next couple of quarters. We'll be able to further bring it down by a few bips. That's number 1. Number 2, with this additional funding coming in through allocation via PMAY, will also bring down the cost. In terms of margins, yes, our threshold is 3.5%. If you look at last couple of quarters, it is 3.65. We'll be able to maintain this margin level for next few quarters, and then it will start inching up.
Okay. Also on AUMs, your target was hitting 1 trillion by FY27 hence. That's FY27 end. That's 3 years from now. Where do you think you will end FY25 with in terms of AUM? Because year on year, your AUM growth has been less than 8%.
So I think we should talk about the loan book. So if you look at the loan book as of June, overall book is 67,000 crores. Out of that, retail is significant. Retail is 65,160 crores. So if we see this year, the retail book will grow by 17%, and largely the growth is going to happen in the retail side. We plan to start corporate in H2, so we will be able to add maybe close to 1,000 crores this year on the corporate side. As of now, the corporate book is little over 1,800 crores, so we'll be able to add about 1,000 crores in the corporate side. On retail, we'll be able to show growth of 17%. And within retail, our focus is going to be on affordable. Affordable, as of June, our book is 2,330 crores. We'll be able to take that book to 5,000 crores, followed by emerging and then prime. So the overall is 17%. If you look at the growth in affordable, it's going to be about 170, 180% growth on book. If you look at emerging, it will be about 18, 19. Yeah.
Okay, just a quick number. What was the credit cost this time, and what can you guide for the full year? Has it gone up?
We have guided credit cost this year 30 bips. I think for quarter one it was negative, so -7 bips. So we'll be able to maintain credit cost.
Okay.
All right, Mr. Kousgi, we'll leave it on that note for today. Thank you very much for giving us an update on the business, and good luck for the rest of the year as well. Well, we haven't had a look at the market in a while, and the market continues to surge along 1% higher on the Nifty. By the way, today's listing is also doing really well. Sandstar into a lot of products that are made out of maize, and they go into all kinds of industries, including foods and so much more. 30% up. That's a listing that's done really well. A lot of stocks actually up and about. Ashok Leyland, Memphasis, Home First Finance. By the way, we're talking about PNB Housing. Home First Finance's numbers have also been very well received by the market. So lots of excitement there on that stock, about 6% higher. That's the market. We do need to take a very quick break on that note. We'll come back on the other side and get you key excerpts from our exclusive conversation with Shantanu Roy, Chairman and MD of BEML.